What's up, financiers? It's E of E&L Finance. Since this week the market was dipping, I thought it was the right time to do this challenge. A while back, we did a video on building a diverse portfolio from scratch, in which we built 3 different dividend portfolios consisting of one company from each sector. It was supposed to be a series of 11 episodes, picking one company from each sector that best fits each portfolio's goal. But long story short, I just realized I could do this in one video using M1 Finance. So in this video, we'll be using M1 Finance to build and invest into 3 different portfolios to generate passive income. But before we get in, if you like innovative ways of investing and different challenges to fit anyone's budget, hit that subscribe button and join us on our journey as we continue to look at different methods of investing. So here is our M1 Finance profile. It looks great because we haven't done the initial deposit or invested any money into the profiles yet. But after we show you guys the 3 portfolios and what's in it, we will be making the initial deposit, and it should be going in Friday, March 5th, the trading day at 9:30 a.m. Before we get into the M1 Finance, I just want you to know this is a learn as I go. This is my first time using this platform. So I want to apologize ahead of time, just in case my thoughts seem all over the place. So the M1 Finance portfolio consists of 4 pies. Inside these 4 pies are a bunch of different stocks, depending on the portfolio that we're building. As you can see here, we have a high growth portfolio that I can go in another video. It's full of all the companies that we believe will continue to grow for many years to come. The other 3 pies are the 3 different dividend generating portfolios we discussed in the video before. We have the maximum gain portfolio, which is full of companies that pay ridiculous amounts of high dividends, but are positioned in their sector to afford these high dividend payments without having a crazy high dividend yield. Underneath that is the Aristocrat Portfolio. It's full of companies that have been paying a dividend for over 30 to 50 years consecutively without any interruptions. Then we have the Balanced Portfolio, which companies we believe will continue to grow and increase their dividends at the same time. The first portfolio that we're going to discuss today is the Aristocrats Portfolio. Inside we have Procter & Gamble for the consumer staple sector, Federal Realty Investment Trust for the real estate sector, 3M for the industrials, J&J for healthcare, McDonald's for consumer discretionary, Chevron for energy, IBM for information technology, Con Ed for utilities, AT&T for communication services, Aflac to represent the financial sector, and PPG Industries for materials. All of these companies in this portfolio has had over 40 or 30 years of paying dividends consecutively. I can do a breakdown of each company in another video. Let me know in the comments below if you guys would like that. Now moving on to what's in the balanced portfolio, we have Target for consumer staples, Realty Income for real estate, Honeywell for industries, Abbott for healthcare, Domino's for consumer discretionary, Duke Energy for energy, Microsoft for information technology, Waste Management for utilities, Verizon for communication service, Chase for financial, and Stanley Black & Decker for materials. Now for the last portfolio, the maximum gain portfolio, full of very high paying dividend companies. We have Pepsi representing consumer staples, Public Storage representing real estate, CAT representing industries, AbbVie representing healthcare, Cracker Barrel representing consumer discretionary, ExxonMobil for energy, and Apple for information technology. The reason why we have Apple is because we believe that in the near future, Apple will pay once again 80 cents or higher, as this is what they were paying before they did the stock split in August of 2020. American Electric to represent utilities, Crown Castle to represent communication services, Allstate to represent financials, and Home Depot to represent materials. For the Aristocrat portfolio, we have a dividend yield of 3.65%. For the balanced portfolio, we have a dividend yield of 2.66, which is great because we want room for growth And for the maximum gain, we have a dividend of 2.65. I know what you're saying right now. The math does not add up for the highest paying dividend portfolio to have such a low dividend yield. But out of the three, the companies in the maximum gain portfolio position themselves to afford paying such a high dividend without actually being a dividend yield trap. So M1 Finance allows you to auto invest, which once you have at least $25 in the account, it will automatically invest the $25 into your individual pies or your overall portfolio. So I'm going to turn that on along with making the initial $100 deposit. So on Friday, March 5th at 9:30 a.m., it will take the $100 and invest it into all 4 of my pies. So now the deposit is complete. And so I'm doing this recording Thursday, March 4th, and now I have to wait for Friday's trading day to start. So it's the end of Friday, and I was periodically checking in to see how the account was doing, and man, I was down, I think, $5. And then by the end of the trading day Friday, I'm up $1.46 from my initial deposit of $100. So now moving into the portfolios, we can see that it took the $100 and split it among the 4 portfolios, giving me around anywhere between $2 to $3 per company. My thoughts so far on M1 Finance is it's pretty cool. You basically build your own portfolio and acquire a bunch of fractional shares or whole shares, depending on how much you put in and what percent you allocate towards each company. Haven't decided yet on what the budget is for this challenge, but I will continue to capitalize on days like this that pull back heavily. Since we're buying fractional shares, we want to maximize our investment on dipping days like the week we had so far. We hope this video was helpful in some way and want to thank you for watching. And as always, if you find this information useful, don't forget to smash that like button, subscribe to our channel, and set your alerts to receive more content like this one. See you guys in the next one, and remember to follow the 3 M's. Money makes money.